Welcome, welcome, welcome. As you saw in the title, the market is in free fall. We got a lot of names bleeding right now, one of which being Snowflake. So let's just go right into it. I mean, what do you think here? Let me get this chart up here.
Yeah, I
Right
mean,
when I saw that message, I was like, oh man, I was about to do a wellness check on you.
full disclosure, I did add Snowflake this week, yesterday,
Okay.
20%. So still absolutely bullish long term. This is a perfect example of a disconnect from what they're executing on the business side and what the stock is doing. Their product couldn't be going any better for them, but their stock price obvious disconnect. It's a similar fashion with Tesla. You're seeing all this progress under the hood in Tesla with the FSD, even like Optimus and the AI, but their stock price has just been absolutely destroyed the past couple of years. Snowflake's in the same ballpark as that. How do you invest in a company like this, or what do you do going forward? It's you got to put you have to figure out what kind of investor are you. Are you more of a trader or are you a long term investor? If you're a long term investor, this is technically what you've been hoping for I don't know over a year. But a lot of times when it finally gets to a certain point of like, oh, I want to buy once it breaks 150, people chicken out. And guess what? When it starts reverting back, when the price action starts balancing itself out and starts breaking out from its base, people always get FOMO. That's why I always have a 5+ year mentality. And this, I've been very vocal on. I think it was last week or even 2 weeks ago. Like this earnings cycle is not the cycle for software names. We, how should I put this? So every massive tech revolution, there's always going to be an initial wave of investment that's targeting like essential infrastructure such as chip. Like right now for the AI, it's going to be chips, servers, and computing power.
Right.
So the semiconductors, the infrastructure players like Google, Azure, AWS, Google Cloud. So in preparation for the inevitable explosion in AI applications, cough, software companies, there's going to be a lag between the infrastructure investments and the broad adoption of the resulting technologies. And the duration of that gap essentially is what is the unknown. So I thought maybe it would happen end of this year or this year because we clearly saw the validation of it from the hardware players. And we saw it from the cloud infrastructure players this earnings cycle. It's like, all right, so maybe the applications down the line, you're seeing across the boards on all the software earnings calls, like they are not really seeing it right now. They are in full-on investment mode. The companies, which means margin compression. Wall Street hates that. Algos hate that. If there's no margin expansion, there's compression. That's a no-go. And there really isn't an uplift on the guide for next quarter. But I will say, almost every single prominent software name have increased their full year guides. So what does that tell you? Yes, next quarter might not be the best, but they're going to see second half pickup, and they're essentially giving you a precursor of like, I think that lag between the infrastructure investment to application will happen at the second half of this year. And that's what everyone's kind of missing, like missing the boat on what's happening. So it's an overreaction in itself because they're so nearsighted that they're just thinking about next quarter. But you're seeing management across the board say like it's happening in the second half, and we're guiding up for the full year on that. And that's why I'm adding.
And I couldn't agree more. I think revenue expansion is always a great thing. Forward projections that are going to go up, always a great thing. I do think there's also the fear in the market that keeps people stuck in the here and now. And people like, dude, it's what FOMO is. It's like, I'm going to make a decision based on right now, but I'm going to pretend that I'm thinking of the next 5 years. But it's like in my head, I'm thinking of the next 5 years, but right here, right now, I'm afraid of tomorrow. And so I just keep my money parked on the sidelines, keep my money in these dog shit penny stock pump and dump names that are going to 10x overnight. And then I'll add into Snowflake. Then I'll buy the good names. Then I'll buy the Teslas, or just I'll buy the S&P. Then I'll start doing some real invest. If only I could just, it's broke mentality, man. I mean, it's a broken system of thinking. And like every single investor that's ever been good at this tells you one thing: like if you don't have an edge, you have nothing. Like you're just guessing. Like you need to have some sort of edge, some fundamental theory, some fundamental system of belief that'll guide you in the right direction to make good decisions based on quality information. And like what I'm hearing from you and what I've learned from you, and just kind of talking about these names, is like that there definitely is a lag. There is a problem in that, like, most of us laymen's, including myself, don't fully understand the scope of what this company does, right? Like, I don't know. I don't understand that shit. So understanding how that could impact a large scale business, which also, surprise, most of us don't have a fucking clue what's right to run a multi-billion-dollar company, right? So like, whereas that's why I think your insight is particularly valuable, in that you've worked within a very large machine long enough to know these are the kind of impacts that these small little changes or adaptations or improvements can make over the next 10 years. And that's effectively what you're breaking down. I mean, am I wrong?
No, you're absolutely right. And like, it's tricky because this decline in stock price is absolutely validated, because again, there are short-sighted thinkers, or like they're thinking near term, and estimates on profit estimates are going down, and valuations, like technically for MongoDB and Snowflake, their valuation has kind of gone more expensive, even with the stock price being down 10%. So that it makes sense why the stock price is going lower and breached 150. It's below 140, but I'm telling you, like, the Snowflake summits in 2 weeks, this is the first summit for the new CEO, who is a product-oriented CEO, who's an AI genius.
Which is
and
huge.
35% of Fortune 2000 data is stored in Snowflake already. What do you think an AI genius is going to do with that? Something probably revolutionary. But guess what? Jensen, the CEO of NVIDIA, is going to be a keynote speaker at the summit in 2 weeks. You don't think they're going to do some kind of reveal of like their go-to-market strategy for AI products? And that's going to be the catalyst that's going to kind of give it a bottom, near-term bottom. That's in 2 weeks. Again, I could care less what Snowflake does this year. I'm thinking the rest of this decade, and I have a 14% position now in Snowflake after this week.
Ooh.
I plan on, yeah, it's a juicy one.
14%, you're saying of your overall holdings, 14% of that is that flake.
Exactly. There's nothing that changed that went away from me thinking it's gonna be a mega cap company one day. And guess what? That's a 5-bagger at this valuation. So I will continue adding, but I will say that I am being more, not strict, but I am reevaluating my portfolio this weekend. I do think I'm going to start consolidating a bit, where if the 10-year is going to continue being over 4.5%, and software won't have any kind of near-term catalyst, in my opinion, until the next earnings cycle, because we still need that proof of concept that AI was actually be a direct beneficiary for them on the top line, which we didn't, except for one software stock, which we will call out later in this at the end of this episode. We're like, wow, this is the only software stock in this whole earnings cycle that got that Gen AI boost, and nobody's really talking about it. I don't even own it yet, but we'll talk about it later. But anyway, I'll pass back to you, Austin, since I'm rattling a bit. But let's talk SPY, because it's rallying right now.
Well, really quick before we move on, because I think it's worth noting, we always kind of give a both sides. So there's the fundamental element, right? And then let's look at the technical. So we already gave this to everybody who's been watching this stream. We gave you this range. We were talking break below 162. We told you this, guys. This is the weekly chart. So we've been telling you this since it was trading right here at about 147. If we don't break 162, we're not leaving. We're sticking around down here. Like, we're living in the swamp, which gives us great opportunity to dollar cost average in, right? So we talked about first critical support 144. That's midway through the range, most likely place this price goes. It's just, this strategy is tried and true. It is the simplest strategy one could use. 2 horizontal lines, so simple, 5th grader could do it. Then if we break below 144, we talked about the opportunity to buy at 130 is quality. Now, as Shay just alluded to, that, yeah, soft bottom. We can't say with certainty this will be it, but I will tell you this. Look at this chart, okay? IPO boom, IPO ooh, IPO boom, IPO bad. And they IPO'd in end of 2020, right? So worst and best timed ever IPO, like really whatever. We're talking June 22. One of the most brutal markets I've ever traded and been a part of was the venture from 21 into 22. It was brutal, man. I endured abuse I never thought I would stick around for. Most toxic relationship of my life, and that's saying something. And it just continued onward. And now this is a name that's consolidated. So I would tell you this: As we went into 2023 and everything ran, right? End of 22 into 23, everything ran. NVIDIA took off, software names exploding. This didn't. And to me, there's only two reasons why those things occur, right? One of which being the bullshit alarm goes off in your head, but there's enough due diligence on this to know that it's not that. So option number two is long play, slow accumulation, pressure on the stock price, keep it down, keep it accessible, keep it affordable. And that's what you see. Consolidating a long-term vision does not make you rich overnight. It means you need to do exactly that. Consolidate a long-term vision to own it all in 10 years, 20 years, whatever that number is, right? And so if you look at this chart for what it is, you can see clear sell side pressure, right? Like it's coming in. Look at all these big volume spikes. For those of you that like looking at a chart, then you get a little bit of buying right here, but it's not enough to move the needle. It's enough to push up and not enough to move the needle. Then you get some quieter buying here, which this is the kind of stuff I like to see in consolidation. I like this nice and quiet accumulation. That's somebody who is very rich, very knowledgeable, and very powerful, making a play on something that they don't want. Like, look at the best pitchers in baseball. Do they tell you what pitch they're going to throw? No. Why was Greg Maddux so good? Could he place the ball? Absolutely. But more importantly, you didn't see the ball until it was already 3 feet out of his hand. Like, that's a difficult task to manage, right? You don't telegraph the moves you're making with money. You just don't. You make them quietly, and then you stomp on people's faces with the results. That's how, at least from what I've seen, the rich, the truly ultra wealthy and really most brilliant investors do. Even the Michael Burrys. Look at what he was doing. He was just quietly building his position. Now he talked about it, right? And you saw the Big Short, and that's a dramatization of what really occurred. But he was just asking questions, not broadcasting his move. Do you get what I'm saying? I'm trying to explain this in a simple way. But
you absolutely
know
it.
Tells a story.
Yeah, 100%. And also, I got a couple messages wanting me to talk more in depth with Snowflake. So I guess I can talk even more because we didn't talk since their earnings a week ago. We had the holiday weekend. So what happened? Why is it down? Why did it go up 10% after the earnings and went down 50% right away within the next day? I mentioned it earlier where Wall Street or algos don't love margin compression or profit estimates not rising. Why did Snowflake not be on the EPS? GPU related costs associated with their investment in the product that made them miss their top line or bottom line. Fine, it's not their fault. Everyone's at the helms of NVIDIA. NVIDIA has so much control and power that they essentially have to accept whatever the GPU cost is because they have their first mover advantage, and there's nothing they can do about the pricing of it. Fine, that's no problem, because I'd rather Snowflake become an AI story rather than some data warehouse that missed this massive revolutionary thematic, and now essentially there's a data warehouse company and their valuation isn't justified. If that's all it is. And I did talk to two people within the space recently, and it's absolutely real. The amount of substantial share of the IT budget is going straight to compute. It's not just GPUs. It's all about compute, and they care about the application or software elements still, but their focus is not being left behind on this AI race, and it's all about compute. That's why you're seeing the Azures, AWS's, the Google's, the cloud infrastructure players, and DigitalOcean. Called DigitalOcean out a week or two ago. You're seeing them on fire right now. It's because that's where the IT budget's kind of going towards, because they know that first layer of this revolution. I mentioned, the infrastructure component, they have to ace that before they can figure out the application component. That's where the opportunity is, because best of breed stocks like Snowflake, who I know will be around, and AI will not replace them. There's going to be over 50% of software names will be replaced in the next 10 years. I know Snowflake won't be one of them, and they'll actually be one of the leaders. Rarely do stocks like this go on sale because they're just thinking about the next couple months, not the next couple years. And that's why I'm adding know your risk. If you haven't really gotten into Snowflake, great time to DCA. If you want 100 shares, do 25 shares right now, do 25 shares after the summits, and then do the rest of the 50 after their next earnings to see what they predict, because nothing about their earnings was thesis breaking. They actually had a really strong print. It was their guide that was it wasn't as big as I thought. And guess what? Guys are all just fugazi. It's not facts. It's just pawn in their chess game to kind of not mislead investors, but essentially take the pressure off themselves so they can just purely execute about the AI product. And we're going to see in a couple weeks with the summit how revolutionary the product will be.
Yeah, I couldn't agree more. And I mean, you brought up interesting points. Let's get this chart back up here.
Oh, I added DigitalOcean this week too. This is my favorite one.
This buy side, and I mean, we've been talking about this for a while. That buy side is phenomenal. I mean, you've been seeing it come in chunks. That the buyers are clearly here to party. Mm-hmm. And what I would tell you, everybody listening from a technical perspective. So we gave you this one. We covered this one a long time ago. We wanted the 1, 2, 3, 4, and then springboard. That is a patented move in the market when you see long-term, large-scale accumulation. Price runs, drives down, new low, new high, new low. Then we go. And yes, it rhymes, I guess, now in hindsight. So right on. But you can see that accumulation has been going on for a long time. There really is no sell side pressure. And whenever you see this kind of move, and this is, to be honest with you, this is why I wanted to bring this up. I'm glad you brought it up. I was going to bring it up. I had this chart locked and loaded. I want to illustrate what I think could be a parallel here with Snowflake. So you're looking at this chart, right? So again, IPO'd shortly after Snowflake did, March of 21, ran, came down, boom, done, boom, done. Now we're at this interesting inflection point, again, following that simple slow moving average, right? We've played with this. When below it, we're bearish. When above it, we're bullish. Stocks Buddy, one of our best trading indicators, just went bullish again, set the stop loss at 35.23. Whenever I find Stocks Buddy sets the pivot point at a pivot point I had already identified, that is a key level where imagine it's a locale of warfare in which if the bulls can supersede and they can overwhelm, that is going to solidify itself as a bedrock foundation for price for the next X amount of time. Meaning if the company doesn't fundamentally change what they do and destroy their future roadmap, we are not going to see this low again. And I would argue that what we're seeing right now parallels a little bit to Snowflake here. We're just a little bit further along on the DigitalOcean side of the journey, right? So we got that big run, right? We kind of consolidate. We find a new low. We trade right around there, find a little bit of a higher low. We find a slightly more relative higher high, but we don't breach this 235 level, which you can see was a big struggle here, and it happened to also be our IPO price. Now we're finding a new low. I'm going to flip back and forth with these charts because I think it's worth illustrating. Mm-hmm. You saw that sell-off right there. Snowflake. Post earnings, data breach, whatever, sell off, huge move, slow cataclysm down, resurgence of buying, and then a little bit of consolidation. I would say that I anticipate a very similar move. If you can see, we're getting a very similar move here of large scale boom down, a little bit more, and then we peter off into like the 120s, 130s. That's our springboard. Whereas again, as long as none of the fundamental and core elements of this business change, I think we're going to see a move much like this, maybe come back one more time, and then we're going to retest that high. So that tells you right here, anytime we get that, God, this is like, I wish Lee was here. This is his bottom feeder setup of a lifetime. Anytime you get these bottom finger hanging ons like a shelf, you're always getting some phenomenal accumulation, and they're basically setting your rock bottom pricing, which is what I love because I want to buy my shares when I know they'll never be that cheap again. And I just want to sit and wait and get fatter and richer and laugh and enjoy myself, knowing that I had the inside tip when no one else did. So I would say that those charts I do see some parallels there that I think are worth noting. I think the fact that they're in a similar space does also kind of justify what I'm telling you here. But again, do your own due diligence, trust the chart. We're giving you everything. As Shay eloquently put it before, the fundamentals teach you what to buy, and then that's why we go through the technicals to understand when it is the appropriate time to buy them. So on that note, let's get over to the S.
Is exploding. It's up 0.6% now. QQQ is about to go green. It is up like 1% in the past like 15 minutes. Really? Gotta love a month-end close.
Oh boy, look at that! Look at that! Look at that right there! Woo! It's like they're going skiing, man. Look at that ramp. I like that.
No, it's huge. I was prepared to come on this and say SPY needs to close above their 21-day EMA on the daily chart. If it does,
we're going back to 531 easy, dude.
It just reclaimed it with ease and volume. It is still running. We're gonna It's so funny. There's so much FUD in the market today. With
Dude, we already gave him this trade. You guys, if you would have been here on Monday 2 weeks ago, 522, we told you that's critical support. Break above that. Aim for 528. Look at that. That's 100% swing. Giving it to you tenderly,
it's
tastefully.
Absolutely wild.
What more could you want? What else do you want from us? Give him that sauce, dude.
Super easy.
That
like,
is fucking strength, dude.
It's so much strength. Like,
this
that's
is getting me
revved
up. I wish I was trading this. I'm really pissed I'm not right now. This is oh, that's a move, dude. Look at that.
It's gonna be a juicy one. Again, I was a little caught off guard that the market sold off after Nvidia, because I thought Nvidia was the last catalyst it needs for the next leg in the rally. And PCE this morning was actually a strong one, but nobody cared.
That's what made no sense. That's the fake out. When you get strong data, but you get poop market conditions, that's how you know somebody's just trying to bend you over and take your money. And if you look, 15-minute chart here, we're going back all the way to the end of week through May. We have not seen a move like this. We saw it on the 24th. Obviously, news, data, boom, bad. But then look what happened after. We came back up again. We moved from 500 to 520 in pretty much from May 2nd through May 14th. So in 2 weeks. So this is the month of May. We have not seen big brick sticks like this. I mean, that's big dick volume. Those are big dick candles. You don't see moves like that. Look at this chart. When have you seen moves like that? Single solitary 15-minute candles. I'll put it on the hourly just to give you a cleaner illustration. Look at this. We haven't seen that kind of strength. Now, volume is still piss poor compared to what we saw sub 522, but we're north of 522, which is a good sign. No, we're just playing footsie with this moving average right now.
100%. Like, I wouldn't short this market. Even like, I was entertaining maybe hedging on SPY just because it broke the 21-day EMA. So I want some protection during the weekend. I'm glad it didn't. Like, all you have to do is just track the 21-day EMA. That's literally all you do. If it breaches it and breaks it with somewhat of volume, buy a little protection, and then do the same thing in the 50-day and 200-day. Like, but if the way it just every dip is a V-shaped recovery. That tells you there's trillions of dollars on the sideline that just want to scoop up any kind of dip, and there's not going to be a correction before the election 5 to 6 months. I'm telling you this. Like, it's just algos playing with the market makers to see, like, there's low volume. Let me see what I can do to get people to break out of their positions or whatnot. It's literally chess for them. So no, I think SPY is in the clear. However, I do have an interesting. I did have an interesting play specifically on software. If you want to go that route, or
really quick, I just want to give you a little credit here. You also gave them the juice on that low IV pump, dude. When we were talking about those options trades, we were talking 10% premium. IV was at 10%. IV has escalated to north of 25-30. That means had that options contract moved zero, had the SPY moved zero, you made money. That's genius work. I really hope you guys are really following this. Amy, thank you, my friend. A little support, a little love there. If you're following us on YouTube, like the channel. If you're on Twitter, retweet it, man. Show us some love. We appreciate it. Peter's asking long snow. Clearly, Peter's late to the party. Peter, welcome. We've been talking about this nonstop for, I don't know, 6 months now. Like, my one kid asked me the other day, my 12-year-old, he's like, do you, because he had we won a fantasy football league. And so he's getting $200. Most brilliant question he's asked me. He said, so should I buy like a share of Tesla or a share of that snowflake one you keep talking about? I was like, hey, it's a good question. I was like, honestly, I don't know. I'm torn now. I love that you just asked me that question. So let's get into it. Peter, what do you, well, let's do SPY first. Let's talk about this really quick, and then we'll get into that, because I think right now this is a pretty critical impasse here. So again, we have SPX in the chart. It is the SPY, one and the same. Do not worry about the pricing. Just take off a zero. It's totally fine. Right now, we have the 1 hour breaking out north of the moving average. It is hitting our critical support, 522. It has rebounded quickly. The volume is okay. It's not prime time, but it is better than what was expected. On a 5-minute basis, it is eclipsing our market on close order flow, which is typically the biggest parts of the day, short of this one was weird. May 30th. Look at that sell side May 30th, dude. You see that? Zero movement. That's a sneaky order. Because that's midday. That's not market on close. That's a sneaky order.
Yeah,
Oh,
I mean,
that's sneaky.
there's nothing. Spy's textbook right now. There's not. You should be excited about the way it's ending. But should should we talk Snowflake again, or should I just do a brief overview of it?
Yeah, go for it, dude. We got.
No,
I think a lot of people are here to learn about the snow. They want to know.
All right. Again, I'll redo it. Snowflake Summit in 3 weeks. I really think that's going to be a catalyst that's going to provide some kind of near-term bottom. My favorite metric, I say it every single one of these streams that we do. Rule of 40 score. What is the rule of 40 score? Combine the revenue growth and the profit margins. If it's a 40 or higher, you're part of the elite club. And it's every software company from VC stage to IPO, their whole goal is let's qualify for the rule 40 score. I know from anecdotal evidence, I've been in the industry for quite some time. That is the goal. And guess what Snowflake's is? 24% top line growth with 28% profit margins. So that's a score of a 52. Unicorn status. What's their free cash flow multiple for right now? 51. So you're saying the rule 40 score is actually higher than their free cash flow multiple, but people want to sell it off. That's bonkers for me. There's only a few stocks out there that have a higher rule 40 score than their free cash flow multiple. And Snowflake is a company that will be here for quite some time, and they're going to be one of the winners and leaders of the application element of the digital economy. So the price action is stupid poor right now. That's usually when it spells opportunity. When there's blood in the water, I love to pounce. People ask me, how did I know CrowdStrike was a buy when it was below $100? How did I know back then that they're going to be this all-in-one cybersecurity platform for enterprises potentially by the end of this decade? Because I studied the company. I saw the module adoptions quarter after quarter. The Rule 40 score was always a 55 plus. And it was just fundamentally and technically, it was just like, fundamentally, it was wow, this is a unicorn status. And executionally, they were executing with 8+ module adoptions. Like, it was wild. I'm seeing the same thing for Snowflake right now. Don't get confused by the stock price action. Like, you look at their stock, you can see it fine. Wow, it's going to they're going out of business. Their software is going to zero. Like, they're obviously a fake AI company. That's not the case. I can promise you, it's not the case. It's just this happens every once in a while. Like, PLTR is the same thing in the 8s. Like, stock price is disconnected from business execution. Same thing at CrowdStrike. It happened below 200. You're seeing the same thing with Snowflake below 150. Like, it's probably going to be some turbulent couple months, but that's when you want to add, because unless the thesis is breaking, which I haven't seen it from Snowflake, it's actually expanding, I'm adding. Why would I not add? So again, have that 5+ year mentality, because if you do, you have the luxury of benefiting off this near-term turbulence and bumps like Snowflake. And I had the same thing with DigitalOcean. I got to DigitalOcean in the low 20s. I think it's at $40 right now, and I think it's going to get to 50+ by the end of this year. And I think it's going to be a monster company, and as a cloud infrastructure player in the AI new digital economy for SMBs. Like, if you're going to be a growth investor, you need to kind of have really thick skin and have high conviction, because this game is meant to shake retail investors out of their position and become guppies for this hedge funds or the big players. Like, oh, like they all capitulated. Everyone who invests in Snowflake and IPO or above 200 just capitulated in the 130s. I'm going to pounce now. I'm going to make my bank while all the retail lose their money. Don't be that, because that happens all the time. It's such a cautionary tale, and I hate to see it. And I'm just saying, just hold on. Data, I saw that news. It didn't get hacked.
Explain that, because I think that's what's going around right now.
There
That's
is a
kind
news
of the
story
flood that's hitting the market at the moment.
Let me pull it up. I looked at it and I was like, oh, this is not much of a news story.
Well, while you're pulling it up, just go ahead, pull it up. While he's pulling it up, just to justify here what he's talking about right now, to make this very simple for everyone. So I've already taken profit on some of this, but like this is what happens when you do your due diligence, you have your thesis, you understand the scope of the trade you're taking. I'm still going to let this ride. I still have a lot of time. I own a number of shares. We bought down at $8. I bought a little more at 9 and a little more at 12. Doubled my money since then. I expect to continue from here. I'll flip to the chart so you can see what I'm talking about. This is the play. If you are really in this for the long haul and your goal is to basically set yourself up for a future of success, this is how you do it. Easy setup, easy buy off the bottom, 753, pushed up. We continue to go up. These are 3 key levels we're watching. We want to see the breakout over 26.59 on Palantir before this continues for more upside. We did the exact same thing with Robinhood because, again, it was a no-brainer buy at $758. Like it just made sense. It just made sense. Here's how we did. And again, the links at the bottom, join the Discord. You'll have these trades up also 500%. Now, I bought a number of calls. I wanted the 15s and the 20s, and I wanted short-term capitalization, long-term capitalization. Short-term, I'll probably convert to shares, sell premium again. It's much more complicated. Don't worry about that. The point is I put in basically I 5x my money in just a few months with the right trade. I mean, look at this thing. It's gone just absolutely batshit from the buy. And it's simple. It's simple if you can just understand, again, the Warren Buffett philosophy is king for a reason. I need to understand the business. I need to understand why it makes sense. I need to understand how I can benefit from it. If you can understand those couple things, you are golden. 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 End of diatribe. Go ahead. Did they get hacked? What really happened? Drop the truth for us.
Yeah, so there's no they made an announcement. There's no evidence that the hack activity was caused by any vulnerability on Snowflake's products. It's a nothing burger. I think the price action today was clearly software related. So there's a broad software sector. And yeah, I mean, I love it when my kids start playing with each other. CrowdStrike, Snowflake.
I was going to say that's your dream scenario.
That's my dream scenario. But let's talk about the software sector, broad software sector. Everyone's freaking out. Like, is this 2022 all over again? Can you bring up IGV, the chart?
Yeah.
So IGV, you guys don't know this. This is the best ETF benchmark for software.
You said IGB?
IGV as in Victor. So
Victor.
Salesforce is in this, CrowdStrike, even Microsoft's in it, like all the heavy software, enterprise software players. Can you share your screen? I think it's idle.
Oh, my bad. Yep. Yeah. Gotcha.
Perfect. All right. So guess what I did? I think it was yesterday. Yeah, yesterday. How did I hedge my portfolio? Why am I in such a great mood probably today when my portfolio is down, 5% in the past 2 days? It's because I'm a long-term investor with a trader hat on when I see an opportunity. Put the 200-day SMA on for IGV.
Looks like it's trading way below it.
Wait, is this the weekly or daily chart?
That's a monthly.
Yeah, do the daily.
What you want, the weekly?
No, the daily.
Gotcha. Where the hell is it? Yep, it's not showing.
All right, do you can do the 40 on.
You got it on your chart? Just pop it up there if you got it on yours. I don't know why it's not showing.
Let's do it. Can you see my screen?
Yep.
All right, let's look at IGV. Okay. So let's pull this out even more. Let's do, this is a good level to actually, let's do right here. That cleared candle right here. All right. So if you look at, this is the IGV tracker for software sector. So the Microsoft, Salesforce, CrowdStrike, like, and all the heavy honcho enterprise software names are in this ETF. So I use this as a tracker of like, all right, I'm seeing a broad software sell off. Like how can I hedge? Because I don't want to buy puts on CrowdStrike or Salesforce or Microsoft, because these are elite companies. Like, I don't think there's only a certain layer they're going to go lower. And their IVs on their option chains are always 55, 60% plus. So it's not the best protection, because you can't squeeze as much juice as you would want. So IGV is a great benchmark for me to like, all right, I have 40 or 50% of my portfolios in software names. I need to protect myself when things are obviously taking a turn, where the past 2 earnings cycles, like we're not seeing the Gen AI tick up in their specific software earnings, and they're guiding pretty poorly in the next quarter. I should protect myself, because there might be a massive lag between investment phase for AI to actual ROI on their product. So look at this. This broke the 200-day for the first time. So the rally started March of 2023. So this shows like it was over a year. It hasn't even tested their 200-day. This is just a clear strength. First time it did with volume, and it didn't even think twice about it. And guess what? Even today, I was like, oh shoot, this looks very bearish in the near term. I bought puts right when it broke, and today when it was at $75, I still held them. Look at this. When it bounced this V-shaped recovery, it still didn't bounce above their 200-day. This is still weakness, in my opinion. I think this is an interesting hedge opportunity for the broader if you want to protect your software names. IGV buying some 6 to 8 month outputs. I think the December and January puts are dirt cheap right now on the option chain. The IV is very minimal. Don't buy September, October, November, because they're expensive. Why are they expensive? There's an election premium associated to the option chain. So what that tells you is like they expect volatility around that time period, because it's such a polarizing election. Nobody really knows how it's going to go. And because of that noise, there's going to be some kind of premium associated with that IV in that option chain. So you won't make as much. So do the far out one. So I did January. But I bought this hedge, and I did this with a pair trade, actually. Confluence. If you guys don't know Confluence, it's a data streaming software company. It's very similar consumption-based model as Snowflake's, Datadogs, the MongoDBs. Like, essentially, they're capitalizing on this data thematic that AI is going to create this data explosion. And the way their business model works is customers pay as they use the product. And guess what? Data is going to explode. These kind of software companies that use consumption-based models will be able to charge an unprecedented pricing power on any of their products. So I think I like all those names, and Confluent is one that had a really strong earnings this cycle, like one of the few software companies who actually saw the uptick in Gen AI, and they actually went up after their earnings print. And guess what? Look at it. So they had a really piss poor, I think it was a Q3 or Q4 earnings, massive gap down, but it got accumulated. Like, that's a green candle. So I was like, all right, that's some clear buying on that gap down. Perfect VWAP, because there's obviously new investors came into the stock when Confluent went down 30+%, and it's been on a steady uptrend since then. Gap down, scooped up, volume accumulation, green, green, green. This is the earning I was talking about. Look at that gap up. That's very rare for software companies in this earnings cycle. So I'm using this VWAP from down here, perfectly aligned. Look where it landed today. At their VWAP. And guess what it did? It bounced. This is not ready to go lower. I think this is going to go higher. So I think a very interesting pair trade is buying puts in the IGV and buying some longs in Confluence. And that's exactly what I did. And Confluent is one name that I used to own. I was one of these buyers down here. I sold it in the 30s because valuation got way ahead of itself, and it wasn't justified, especially with Snowflake at the time at 160s, and there's Tesla's in the 140s. Like, oh, there's a better opportunity out there. I sold. I'm going to trade this name, and I think that's a very interesting balance. Worst case scenario, clear volume shelf at 2250. So if this doesn't work out, I would bounce. My stop loss is probably going to be, I don't know, like 20, a little under 25, probably $25. And next time, if it breaks that, I'm going to see what it does at 2275, because you cannot argue with this volume shelf. This is a thick floor. It won't break this. And yeah, I'll pass it back to you, Os.
Yeah, I would say 25-30. I like a lot there. 25-30. I like those little mid-range trades. So if you look, guys, like sell-off starts here, resistance, support, resistance, resistance, support, resistance, breakout. You find these pivot points on these charts you like. All you have to know is that pivot point. If we're above it, we go long. If we're below it, we go short, or vice versa. You can go calls or puts, not vice versa. It's fucking absolute opposite what I meant to say. So again, comes down, you can go long here. Again, boom, long. Below here, you go short. Now it does have the propensity to gap down. So trade carefully, trade safe, and line your pockets with protective money. I typed this as he was talking. I realized this is a great thing that I was taught early on. Play the name, hedge the sector. This is your best way to hedge your money, make your money, and be right all the time. So again, if you think a name is going to outperform the sector, you play that name, but you hedge the sector. Kills your gains a little bit, but what it also does is it makes sure that you don't go all in and get beat. And again, going all in is never the option that anyone should ever take under any circumstance. Please, please, please do not do that. It's the stupidest thing you could do. So moving on from that, let me dive in here to this. I want to talk, go back to that DigitalOcean chart for just a moment here, because we're hitting a pretty pivotal time right now. As you can see, we mapped out our areas, right? This is the accumulation area, 24 to 20, buy. You're up a hell of a lot, 30% plus already. So winning. Again, we talked about having the best entry possible so that you have a nice margin, nice cushion above you, so that if the price action does come down, you don't get beat to death. And for those of you that are coming from Shay's Twitter, make sure you hit that link in the bio. That's how you get access to the Discord. You can either type the link at the bottom or you can claim that link. I would go through the WAP plan. It's totally free. Get in there, get access to the mini monsters, get access to the exclusive picks, get access to the exclusive research, get access to chat with the man himself. Twitter's overwhelming. If you want some one-on-one sexy time attention, that's where you're going to get it. Beyond excited that
I will add, Twitter blew up way too quickly for me, and I'm not keeping up with my comments or messages. This WAP and Discord, the best place to reach me. So that's why I partnered up with Os. Like, I need a place where I can talk to people directly, and I get too many messages. I can't respond to everyone. So now I have a centralized location of like where I go to like respond to people. That's where it is. So if you guys want to know, that's why he's calling out the links in my bio. Like, click that, because that's where I will respond to 100% of the time people asking me stuff.
Yep, that's the ticket, man. And if you guys didn't know, just a quick little mention. 2 full beautiful days in sunny Delray Beach. Learn everything you need to know about trading in a very short, quick start masterclass type of deal. Again, ask about it in Discord. Get access in there. It is going to be phenomenal. I'm very excited for a number of things between the screeners, the scanners, and the indicators we're going to be covering and giving access to, along with Shay going deep into his fundamental analysis, helping you understand how he does what he does, what you want to know. So basically, we're going to give you some delicious fish to eat, some delightful mahi-mahi and red snapper, and then we're going to teach you how we caught them, prepared them, cooked them, and now you can feed yourself. That's the goal. So that's all the shilling I'm going to do. I just wanted to shout out Kurt Schilling, one of the best pitchers of all time. Really went the wrong direction with all the politics, but God, I loved him, dude. Nobody threw a splitter like that guy. Favorite pitcher of all time. Who's your favorite pitcher of all time? Go.
Clayton Kershaw. I have his signed game worn jersey right behind my screen. Yeah,
I was gonna say it's got to be the shell, or dude, him and Randy Johnson, dude. Come on, the early 2000s D-backs, dude. You can't beat that. So on that note, which not related at all, let's take a look at what we're going to expect on the SPY moving forward and see if we can put together another passive income options trade. So this chart is a little bit of a mess, but it highlights for you. Take a screenshot, all the key levels you need to know. So we talked back in early May that our bullish support that has to hold is 518. We're below it, we're bearish. Above it, we're bullish. As you can see here, that trade was 518 to 533 in just a few short 2 weeks. You could have made a killing. That was over 250% on the options trade. Every Monday, we break down these trades for you and give you the exact contracts, the exact expiration, and the exact price levels at which we're going to trade them. SPY showing a lot of strength today. Look at that volume come in. Bada bing, bada boom. remember we were talking about we needed to see volume north of 60 million on the day. Today we hit 75. Beautiful, beautiful. Nice 15, 20% uptick. We haven't seen that for a little while on the buy side. The last time we saw that was down here at the beginning of May before we pushed up to 530. That gives me a lot of confidence that we are going to push up and test even higher. So I really like the bull put options right now. I think that there's some big opportunities here that we can explore and make some money on for the SPY. One of those that I was looking at, oh, that's Apple. Shit, hold on, where'd I go? Hold on, we lost it. There we go. It's a little adventurous. So Benjamin, my man, the Swinging Bull, I know you're listening there on the Discord. I'm going to need you to dive into this. I'm looking at, this is from the strategy. It's about 65% win rate, 65-70% win rate, which is pretty phenomenal. It has a nice edge on it. This trade should get you going. I'm really liking the buy. So June 21 of 2024.
So you're sharing your screen? We're seeing the chart right now. Are you showing an option chain?
Yeah, I'm just talking about the SPY. I'm just saying. So right now we're at May 31. I'm liking the June 21 of 2024. So that's putting us, let me get this right here. Expiration of about 3 weeks. That'd be right about here. Okay, if you can see where my cursor is. Buy the 522 put, sell the 526 put. I think that we have a pretty safe and secure line over 524 and change right now. So I think that if we buy the 526, Ben, if you could do your little calculations real quick and let me know. It was June 21 of 2024. I'll type that 6/21/24. Buy to open the 522 put. This is on the SPY. Sell to open the sell to open the 526 put on the SPY. I think we'll take in about $1.50 in credit, and I think that we have an easy 30% margin here to take to downside potential for expiring totally worthless. So I'm gonna.
In this situation here, okay, so we're gonna have about 3 weeks until expiration. So we got a little bit of time we can manage it if we need to. If we're selling the 526 put, which is what the big prices here, we're going to get a $482 credit. And then simultaneously, we'll go ahead and buy 522 put for protection. That will cost us $348 debit. So we'll do the math there. I'm going to with the $134 credit. Okay. And, to be honest with you, this is a 4-wide spread. $134 on a credit spread on 4 wide. That's going to be.
Yeah, I'm loving that.
23-week hold. Only 3-week hold.
3-week holds. I just realized that everyone on Twitter can't hear you. That's my bad.
That's okay. I'll say it real quick, but that's the deal with that credit. I like it. I was thinking this morning.
I'm gonna type this in the chat for you guys.
Which was only going to be temporary. To pull back on 5 because let's be honest, you guys. Everyone, we got decent PCE data in free market, and the market actually rallied.
Buy to open.
And to me, there's some negative things that were pushing SPY down. But overall, we got solid PCE. It came in line what Wall Street wanted. So that's come in line. PCE data sure did, and we're seeing one. Things are digested. Sometimes there's an initial overreaction, but we saw that today. There was an overreaction to the downside. I was confident that this was going to be a temporary pullback in the market because PCE, it was great. As far as football, work, and here we go. Second half of the day, rallied up to 520.
I love it. So I did just post that in the chat. I think that he's absolutely right. So basically what he's saying is we had good data come in today, guys. For those of you watch on Twitter, we had good data come in. It didn't make any sense to see the downward price action we saw. And as you can see, the market quickly recovered from that, as Shay was pointing out, on huge volume, right? So we hit that critical level. Again, we highlighted all this for you on Monday. The level we outlined for you was 518 and 20 cents. If you look, This came down to like 518 and 26 cents. So we gave you that juice. That level was there for you. We talked about going to the 521 call when we hit 518 support. That hit. It then ran to 524. It eventually hit 528. So you had 300 to 400% on the table on that one trade we outlined for you Monday. This is a bull put spread. 4 wide gives us either between $1.30, $1.50 in credit. We expect to close this out at $1 or slightly below, or if the market is in our favor and we continue to rip, this will expire worthless and you will keep the entire premium. Again, we've had about 36 out of 38 weeks successful net profit trades of 30% or more. Basically, my goal in this challenge has been to create between $150 and $250 in passive income per week by selling one of these spreads every week. And we have done very well at doing just that. If you need the little more detail on the trade, again, the Discord link's at the bottom. Jump in there. We're posting it there. I think that we're going to see more strength here on the SPY going into tomorrow, because a day like this is like, look at this. I mean, this is a 5 minute, so be wary, but look at that market on close order flow too. Look at that volume that came in, dude. Come on now.
It's gorgeous. No,
come on now.
Perfect way to end the week. Should we talk about the other stocks we talked about last couple weeks? Oh, let's talk Jumia. Let's see what Jumia has been doing.
Yeah, I like
the mini monster that nobody knows about, but they will. Let's see. This is something that Austin and I have been talking about for weeks, where we're covering it, but no institutional coverage on Wall Street at all. There's not one analyst covering it, but you have 2 of them right now covering it for weeks. We call it. I've been pounding the table on this in the 2s. Austin's been like, once I started going on here, it was in the 4s. What's that now?
Right
oh,
here.
It's $7. Look at that. This
double
is
your money, double your fun.
I'm telling you, this is like such an opportunity. Like last earnings report is like, that's the inflection point. First time ever in the history of the company, they're showed profits, operation cash flow positive, which not profits, but essentially they didn't lose money. And at a constant currency basis, 57% plus growth while reducing the SG&A 30%. That combination is the freaking moats. That just shows you can cut your costs of sales and advertising and G&A 30%, but you're growing the top line close to 60%, and you're worth less than $500 million in an area where there's no competition, because the big boys like Amazon they've tried, they failed. Like, it's a wild, wild west in Africa, specifically Nigeria is just stabilizing. Like, this is an area that all the big dogs want exposure in. They just, in an environment where everything's AI, they don't want to really cough up the capex for creating some kind of logistics network or infrastructure in an area like Africa, where they know they'll be losing monies for years and years when they rather put all their eggs in the AI bucket. Like I mentioned earlier in the call, all the IT budgets essentially going to the AI infrastructure. It's kind of like the budget for all the Alibabas, the Walmarts, the Amazons. Like, they're all focusing on that. Fine, that's great, because Jumia has been around for almost 10 years and they have a presence there. Talk to anyone in Nigeria and Africa. Like, I've talked to a couple people there. What Meta and Google is like in the US is what Jumia is like in Africa. Like, it's like, whoa, you work at Jumia. So I'm telling you, like, there's going to be some partnerships announced with Jumia via Walmart or Amazon, because they want to cough up the money, but they want exposure to this high growth area in the world that nobody really has exposure in. And Jumia, everyone, I think, was just waiting for that 1 quarter of like, can they turn it around? And they just had that. They don't have to dilute anymore. They have enough cash on hand to hit break even by end of next year, which what management's saying. So I think this is a name that's like, it's doubled really quickly. I think it's going to hit 20 next year. Like, there's a ton of runway.
There is. It's been,
yeah.
I think we're going back to $13. I mean, that's like pretty easy and clear to see right now. You can see that this volume's been swollen up for a while. Buyers are coming in. Again, since you and I talked, I did a little more research into those sub markets and sub markets, and you're absolutely right. It's like there is a barrier to entry. Like, they have a moat, dude. They have a significant moat, and that, like, no one else is going to be able to breach like they will. And I think that the geopolitical risk is winding down a little bit, and also as they grow in scale, I think it shrinks, because as their economy becomes more dependent on their company, it's like much like Amazon has done. I feel like Amazon is the U.S. economy. Amazon goes down. What do we do? Think about how many jobs are tied to Amazon at this point, how much people's quality of life and things they engage and interact with. I don't think people realize how often you probably interact with Amazon more than any brand other than Apple. If you have an iPhone, you probably engage with Amazon more than anything else. And whether it's like quick, because I catch myself doing it, like I'll just look on Amazon rather than just order it from the distributor themselves. I want to just, it's easier. My info's in there. Like I just do Prime. It'll come in 2 days. It's just faster. So it's wild to think that that I just shows you that model works, and that that there's the U.S. is one segment. So why wouldn't you know it works? It's like giving you a roadmap to something will be successful. You know it works here. Try it here. Try it here. Try it here. Invest in those opportunities, especially in high growth emerging markets. Like 2 years ago, I started funneling a lot of money into like emerging growth markets, and I'm so glad I did. It felt terrible for 2 years. It felt like the worst decision I'd ever made, but it's paying off now because like there's a great transfer. We talked about a lot of the digital facing work being moved offshore to these companies or to these countries with highly competent people that now have access to quality internet and things like that and can do these jobs and want a fraction of the price because their cost of living is so low. So it brings a competition into the American market that like no one is ready for. I don't think. Like if you're a designer, if you're a number of jobs that are digital based, I think it's gonna be very hard. But it also tells you that more money is going to be put in their pockets. Where's it going to go once it is? Consumer spending is going to grow. Where am I going to make profit off consumer spending growing? Bada bing. So yeah, I think the bottom's in personally.
No, I think for sure. I don't think we're going to see 4s again. I think $5 might get retested. But even then, like when it breached $6, V-shaped recovery. Like every single time it broke $6 the past 2 weeks, boom. V-shaped recovery. Like there's certain, all right. So people ask me all the time, like, how do I find these like mini monsters that really aren't the Max 7s or like $50+ billion companies that are actually worth like less than $1 billion, even less than 10 billion? It's really simple. Like find which thematics you're bullish on for the rest of the decade. For me, AI, data, cloud, e-commerce. Boom. 4 thematics I want my growth portfolio to be exposed in. Now from there, I look at all the players fundamentally, and then after the fundamentals, I put my list together. Then I look into their management and listen to the conference call, all that stuff. So Jumia is why it's a perfect fit in an e-commerce like portfolio if you want. As a wow, that's my moonshot pick. That might probably bring the biggest alpha. Like I think Amazon is an absolute monster of a company. Like the whole world will have Amazon Prime at this rate because they're bundling together so many partnerships on like One Medical, like even like right now you can get free food delivery this announced this week. Like Amazon's gonna be a monster company. I think Mercado Libre will be the king of Latin America. I think Jumia is going to be an wow, like moonshot e-commerce in Africa. And I think Global E, ticker GLBE, is essentially solving the complexity chain of cross-border transactions. So like, do you think e-commerce will continue growing for the rest of the decade? Absolutely. Globalization is absolutely real and it's going to continue. And Global E is a monster moats within $1 trillion industry, and they're only worth like $6 billion. Monster moat, no competition, and they have a Rule of 40 score of 50+ for the next 3 years. And this is a story that's why, like right now, we can talk about the price action. Why is it consolidating, not like going up as much? It's because Europe is going through a really bad luxury goods recession and consumer goods recession. Like it's getting hit hard, and it's been for years. The worst is behind them, and you're noticing just track the macro data on Europe the past couple of months. You're clearly seeing it's getting better and better. Once that happens, green skies ahead for Global E because, like I said, the Rule of 40 score is 50+. That's with a European recession. You can make the argument that there's pockets of recession across the whole world right now for commerce, and they're still scoring at 50+. Guess what's going to happen in a normal environment when things normalize? Because eventually, yes, it's bad on the consumer side. It will go towards the mean, and once that happens, they're going to have so much clients on their using their platform that it's just going to take off from there. And before today, like this week, it's showing clear relative strength. Like you can see the accumulation on the daily chart, like up 2% every single day, back to back days when the market and growth was bleeding. So It looks like it's been like, if you look at the past week right there, you could just see like it was just getting accumulated like after 30. Like it won't break $30. Like it doesn't want to. I do think this is one of my favorite players that isn't really discussed enough, and I think it's a monster in the making.
Well, look at that launch, man, from IPO, May of 21. Boom, basically to $80, almost tripled.
No, it's got a juicy
That's
business
absolutely
model.
wild.
Like, it's one of those business models that scale perfectly in a highly secular growth theme that is just like a perfect picks and shovel play for e-commerce, like globalization. It's just like it's perfectly aligned in this current climate. And if you guys are familiar with Shopify, their pro label is Global E. They just don't call it Global E. And Shopify has a 15 or 20% partnership in Global E. They will never compete against one another. Only threat, I think, is maybe Amazon. But again, fine, bring it. The world is a massive place. There's plenty of room for a duopoly with Global E. Absolutely. And I call it like Amazon's focus is all AI right now and compute. I think they're not going to put that much weight into this specific side of their business when it's like not that much. And they also don't emphasize on international e-commerce recently. They did a couple years ago. Hasn't been really a talk of choice past couple years. So maybe that's just not where they want to put their eggs in the basket in right now.
No, I love it, man. And I couldn't agree more. I think that these are the kind of names that are definitely load the boat, that are, I guess, a little more simple and straightforward. And one of which that I think we've talked about a lot that we deserve to give a little bit of time to is Teslonius Jackson here. Again, we still await our fateful meeting of whether or not we award Elon the money that he has literally said he was going to generate, and I want this in exchange, did his part. And now people are like, you know what? Now that I think about it, I actually, thanks for giving me everything you said you'd give me. Basically, it's like, look, he said, I'll build you a house. Here's what it costs. And guess what? You don't have to pay me until after I build it, and you love it. So they build the house. He builds the house. Tesla investors go, wow, we love it. This is great. The future's bright. But that whole thing, how we said we'd pay you for doing all that work, we don't really feel like we should do that. It's kind of like you gave it to us, and now, you know, and like I've dealt with this with clients. Like there's a problem in that you like do things up front with my marketing business. Like I don't do it anymore because for some reason, once people have the thing that they desperately wanted, they're far less willing to pay for it. As ironic as that is, you'd think that results driven payment would be a little more trustworthy. I think in fact, it creates the opposite. So as far as this chart goes, we're really just struggling with this 182 level. We want to see this stay north of 173. That is a very good sign, but I don't think we're going to see much movement until that vote goes in favor. I think we could see Boomtown. Vote doesn't, Elon bounces. Again, we've talked about this many a times, and we don't need to hammer on it. I'm out. Goodbye. Never touch it. I don't give a shit about EVs, so I'll see you later. Like, cool, but no thanks. Like the growth isn't there. The growth story is software innovation, partnerships, like just making the world a better place. The vision that Elon Musk has really portrayed to the world and then integrated in the company, along with the merciless psychotic work ethic that the guy has to drive results in a quick manner. So I think that really the issue here is like if you lose that vision, then you kind of lose, again, the stock market always trades forward looking, you lose that future value potential. Like you're no longer encapsulating kind of hopes. What I think he's done is like it's hopes and dreams of millennials that the world could be a better place. I was just watching these videos and they cited a study in which that the key to success in raising like successful, high achieving children is that the parents themselves have to believe that the world is going to be a little bit of a better place with their kids in it in the future that they create. When parents kind of have that despair about them, like that the world is absolutely fucked and nothing will ever get better, the kids feel that, they internalize that, and it definitely affects their levels of ambition and I guess forward thinking, futuristic thinking, idealism. You build utopia, no longer becomes an option. I think Elon, that's what he's done, in my opinion. Like at least I'd love to hear your thoughts. Like that's my opinion, is that what he's done is kind of encapsulated the hopes and dreams of most millennials that we know we got fucked by the boomers. And then we see the new generation of people coming in. Like we are the middle ground, right? We're the pivot point of like we're technology, the world before meets the world of the future. You know what I'm saying? Like we are the middle ground. And most of the emerging technology in terms of social media and collaborative effort has come from millennial founders. You've got obviously the Zuck, can't cut the Zuck. Even Jack Dorsey, I think he's a little bit older, but nevertheless, you get the point. But if Elon goes and that future potential goes and that kind of visionary thinking and portrayal goes, and the fuck it attitude, which is like, that's a huge, I love that. Like, just go in there, break some shit, get it done and see what happens. I love that philosophy. I think it's the only way to get anything done. And if that goes, I'm out, I'm done. And I would just be a little sad. It would put a little bit of a bleak cover on the world to know that innovation is actually punished. What do you think?
I don't want to be a part of any kind of shareholder base that doesn't give Elon what he deserves, because he essentially 10x your stock and you just don't want to pay him after he does that because it's too much. What the hell? Okay, sure, fine. Better risk and reward out there that won't be toxic money, in my opinion, that I can make than like owning Tesla. And at the end of the day, Tesla has an Elon premium and it's justified. Like everything that Oz said, his ability is such a wild card. There's no ceiling on it. He creates Starlink, SpaceX, Tesla. He just raised $18 billion for XAI. Like, it's just like stupid amount. Like, he is just one of those once in a generation visionaries. And if you're fortunate enough where he's the CEO of one of the companies you own, you're stoked because everything he touches is gold. And it's just not just typical EV company, or it's a typical standards tech company. Like, it's a visionary company that will constantly innovate like every 5 years. Like, it's any other CEO would be satisfied with what Tesla's done in the past 10 years. Like, they conquered the EV market. They essentially have a monopoly on the supercharging station in the US and eventually globally. Like, any other CEOs, like, we did it. We owned our specific industry, and we're just gonna perfect it and create a high barrier to entry, and that's it. No, not Elon. He's like, all right, this was the first step of my master plan because I don't want to sell cars. I want to sell rides. I'm going all FSD, but I want FSD. The only way I can get there is if enough of my cars are out there in the market for us to get as many miles as possible, so we can like create this safety benchmark to feel comfortable enough to launch this at scale. That's essentially what Elon was doing with the car. Like, he had this 4D vision. Nobody knew about the FSD before. He knew way before everyone else did, and that was his whole vision along. So, like, who knows what his vision is right now for the next 10 years? Like, nobody does. But that surprise element is like, whoa! If he's doing this with EV, he's doing this with FSD and autonomy. I know, like, he's tinkering with Optimus. Like, if Optimus actually becomes a reality, like, who would actually solve that than Elon? So that's exactly why I'm like, I'm out, because he's the visionary that I want. And I don't want to own. I'm a growth investor. I don't want to own an EV company because their fair valuation on Tesla is actually, like, without Elon, if it's just an EV company, $85. And they might still solve autonomy or FSD, but it won't happen in a couple years. It's going to happen in the next 5+ years. It will just be a slow ride on because they don't have that visionary CEO pushing the envelope to get there quicker. So please vote yes. I am part of the camp where, like, if it's a no, I am immediately trimming a third of my position ASAP, and I'm probably going to go on from there, but I'd probably sell off afterwards. Like, I'd rather have my money in Snowflake that's in 130s, or even MongoDBs in the 220s. The software is getting sold off, and like, I know which software companies are going to be the big winners in the new digital economy and AI. Like, I know who the winners and pretenders are. Like, why would I waste my money on a EV company who just doesn't have the kahunas to push the envelope and pay Elon to push them to new boundaries when there's so many opportunities out there?
Yeah. So, I mean, is there a world in which the vote goes the wrong way and we get Elon to move on over and take over with this one?
Oh, I wish. I mean, this is a perfect example of high tide raises all boats. SpaceX is like killing it. Oh, look at the Rocket Lab though, 440. We got in at below 4. That was a quick one. Yeah. So Austin and I talked about this.
Dude.
It's super easy. I mean, Rocket Lab is another great example of business execution, broken stock price. We noticed it again it was an identical chart at Palantir in the 8s a couple years ago. It's like, oh my God, that's an identical pattern where people in Palantir were calling in the eights like they're just a black box consulting company for the government. Like there's no way they're going to be able to have their AIP platform on the commercial side. It's too sketchy, black box, blah blah blah. Rocket Lab is a full-on space prime now. They're not a satellite company, launching company anymore. Like they're a full-on space prime, and they are one of the first movers in a space economy. Hasn't even started. It's literally it's not even the first inning. It's batting practice. Like it's just beginning, and they're actually making money, and they about to be profitable within a year, and they're growing their top line 40+% this year. Like SpaceX is clearly the king, the winner. I'm not arguing Rocket Lab is better than SpaceX. In no world that's the case. But is SpaceX worth 100 of Rocket Labs? I don't know. It's the same argument as, is NVIDIA worth 10 AMDs? I don't know. But they're clearly number one. AMD's clearly number two. SpaceX is clearly number one. Rocket Lab's clearly number two. And high tide raises all boats. Price action has been in a massive base, but their business execution has been flawless. Like they completely pivoted as a company to a full-on space prime, and stock price hasn't reacted to that. And that just spells opportunity, in my opinion.
No, I couldn't agree more, man. And I think this setup was phenomenal. Again, we posted this one. We talked about it for a while, and then we posted the entry. We were looking for around 375. We got as low as 350, 360. And then it just ripped right after that up to as high as 460. And right now it's still trading 440s. So we have a nice cushion on the entry. I think north of $4.13. This one stays up. This stays green and stays golden. And honestly, I think this is going to be a double your money. It is a little bit of a moonshot. It is a little bit of a lotto. There's a little bit of risk. But again, put like 2-3% of my portfolio in this. Put a couple $100 in there. I think maybe 1,000 total. And I just want to see this thing rip. I think that betting on the future is not that complicated. Again, if you find the right business with the right names that have proven that they are about execution above all things, you can calculate your bets to really win. And then if you look at the potential upside here, it's about 275% on a retrace to 1063 and change. So that would be a full retracement to the reversion to the golden mean from the high off the low. So that means like the number that the chart's going to try to climb back to if we see bullish momentum. Again, scaling out profits at 770, 10, 12, and then eventually holding some for this right here, which is about $14. So I like to scale out to about 50% of the position and then hold the rest, see what happens with the stop in place. Again, if you have more than 100 shares, you can sell options against it. You can do a million different things, but that's going to be a winner. I also added a little bit to, I know we're jumping around a little here, but to our digital ocean, that options trade that we were talking about, that $50 call, dated for 2025. I added a little bit at like 180 today. Fucking come on, get some discount bin. Dude, I got a phenomenal. So I got my cost basis down to about like $2.08. So I'm about break even now, but I doubled up the position. This one's going to be an easy 30 to 50% on any upside that we get here to basically 40 and up. With the thesis being that we hit in the money within the next 4 to 6 months at $50, which we were just there back in July of 23. So any other last minute charts and thoughts? I mean, let's take a quick peek at NVIDIA because I know that one's hot topic and everyone's panicking. What do I do? I'm having a real issue right now, dude. I gotta get a hold of Robinhood. Fucking Robinhood. I should have known better. I exercised a $250 call, right? I told you I made a boatload of money and I had a $250 call left. I exercised one to get the shares. Robinhood is telling me my cost basis is $500 and something.
What?
Yes.
Did you miss
my cost basis is $250 flat because it was an options exercise.
Yeah. What's
but
their
today
reasoning?
I look and it says my cost basis is like, let me tell you right now. So I'm like kind of thinking
that's a big difference. What was your premium? Was your premium juicier than you thought?
No, dude. I bought those contracts for like $700. And they
went
up, they were at 10 grand plus. Well, let me look at this. I don't understand why that is, but also I feel like that's actually an advantage to me because when I sell, it's marking less gain.
Oh,
Like I
I
didn't
mean,
have to pay
that's a
more
good
than
point.
25
If you-
grand. That's
If you want to
what
hold
happened.
it, yeah. I mean, if you want to hold it for a long time, for sure, which you should.
Which I
That's a
am.
good
I
point.
am. It
Yeah.
freaked me out. I was like, wait, total return. What the hell is this? But then I look at the market value. I'm like, okay, it's the same market value. So does it really matter what it says my cost basis is?
It's just
If it
a
only
lesser
cost me
flex.
25 grand to get the position open. The
Yeah.
answer is no. So if they fuck up in their accounting, that's a win for me. You know what I mean? It's
Yeah, you're
lopping
right.
100% off what I'd owe in potential capital gains.
Totally.
So I'll take it. So I'm still in those 100 shares right now. So like, let's look today. Okay. So here's the chart. And just for a little perspective, again, that Discord link's at the bottom. This was when that alert was posted, $160 a share. We bought the 250 calls and we bought shares. It has 10x from there, just about. So those options contracts were up 2,400 and some percent. That was a $100,000 trade from less than a $10,000 position, something like that. So absolute banger. It's kind of up in the sky right now. Again, we talked about a blue sky breakout here, which means that there is no resistance in sight. This is in price discovery mode. We have no idea how far it can go. The market has no real rules about this. I mean, obviously, like it's not going to go to 10 million a share, but at the same token, there is no functional resistance for it to trade against because that high hasn't been priced in yet and confirmed. So right now we pushed to about 1150. Also, I don't know if anybody took, I don't know if you remember towards the end of our stream 2 weeks ago, I took those June, what was it? When we were down at about 8, we were just below 900. I took those June 950s. I sold it like 30%, but those things went up. Fuck. If you held them post earnings, those things were up like 300%, even with the IV crush. So for anybody that took those, drop it in the chat. Congratulations. So this is the monthly here. We're still seeing these strong big boy candles, which we want to see this candle remain full 70% or more. That is typically an indicator of continuation from a technical perspective. To go to the hourly, we're still seeing pretty strong inflow right here. If you look at buy side, it's still happening. Now, a little bit of sell side here, but like, what are you going to do? I would love to see a nice retrace here. I would love to see this kind of clean up a little bit and meet the moving average right here at around $1,000. Get a little consolidation before the next move up. As you guys can see here, we'll scoot this back for you a little bit. You want to see that. Every time we get a strong move up, if we get that nice little bit of consolidation, we get another move up. And the consolidation is lengthening a little bit. But again, I think this thing could just continue on that space flight trajectory. My only concern is this. Most stocks historically do not perform. Reverse split, terrible. Stocks dropping 100%. Forward split, good. That's good. That means the demand is there. They want to make the shares more affordable. However, if you look at Tesla, if you look at Apple, they didn't have a great year or two post split. There wasn't much upside. If you recall, do you recall those times?
Yeah. I mean, you're absolutely right. So NVIDIA, first off, high level NVIDIA option flow. This bad boy's hitting 1,400 by the end of the summer. Like this is going to be running still. Ooh. So don't get this like retrace of like, oh, is the top near term top? No, it's not. I'm telling you, like the last earnings call, it gave a huge insight into what NVIDIA is going to be like for next year. It's not just going to be first mover advantage for GPUs. Fine, they won't have 75% plus margins, or their net income profit margins won't be 55% anymore. But they just said that they're going to be delivering Blackwell chips, and their innovation windows on chip innovation is happening from 2 years to a year and a half to now less than a year. They're not giving any room for competition to get like. Imagine if you're AMD, like finally, or 300 chips are coming to the market. We can compete against NVIDIA's H100 chips. NVIDIA just dropped the bomb. Well, we just innovated. Blackwell's coming in a couple months. So all that work you did, AMD, that's great, but you're gonna have to do it again because we just innovate even more. Boom. Like that's NVIDIA says such a massive moat. And it's not just their chip side. They're becoming more of a software player. Like they're creating a, if you heard Jensen talk on the call multiple times, platform. It's less about chips now. Like the bottleneck, they're not seeing any kind of bottleneck behavior. And the bottlenecks they're seeing is more on the Broadcom side, the Western Digital. It's like the network side, network side of it, like the Broadcom's business model and the infrastructure side, and they're creating their own solutions because they're the people that are supposed to help them out. They can't keep up the demand, and because of that, they're creating this new platform approach, and that's going to become more popular as time goes on. Because if you're using NVIDIA's chip, you're going to use their platform, and their software side of their business will start becoming increasing more of a weight of their total revenue, and because of that, it's going to become less of a cyclical type of business. That was always the headwind on NVIDIA. Semiconductors, hardware, it's a cyclical industry. Things are going great until it doesn't, and it's going to revert back. I think this time's different for NVIDIA, where their software components going to increase popularity quarter after quarter. And I wouldn't be surprised if it becomes 50-50 at eventually down the line in a couple years. And when that happens,
that data center growth, dude, like come on,
it's stupid.
That data center growth, it's madness.
It's incredible. And once the software revenue side comes, analysts are going to be able to predict the behavior of the revenue down the line. You can't do a 5-year forecast in NVIDIA. Too cyclical, too explosive growth. But eventually, when the software becomes a bigger component, it'll make more sense. It'll start being priced like Microsoft. Microsoft wasn't a software company initially. It was a hardware company. To create the software side of it, now that you see the fusion of those two components, like how beautiful of a company Microsoft is, NVIDIA is just going to be a monster of a company. I don't see the party ending. They already said that they expect this party to continue for the next 18 months. And who knows by then, but like I can tell you this, they're not going to lose any kind of market share really anytime soon. When you see the CapEx from all the Metas, Googles, Amazons, like buying up NVIDIA, like that's not ending anytime soon. So lucky for you, Austin, you got that at 250. That's a monster move.
Thank you. I'd say best scout job I've done. Now, be very clear. I am in no way saying that I anticipated the magnitude of the run. I knew earnings would be good. I thought we'd be trading above 350, $400. Those are my targets, right? So I knew it was going to be upside, double your money. I did not know we were going to $1,000. Much as I want to say, hey, told you we were going to 1,000. I didn't know that, man. But once it started running, I was like, holy shit, we could see 750. That's as far as I made that. So just to be clear, everyone, I'm not saying it's fucking future of anything. I have no crystal ball. It's just if you can read price action, you know a good name, you know a good name. We need to see if this, because like in the Discord, they're chatting, they're like, hey, when you guys going to have an ETF for us? And I just realized that this ticker is not taken, and I want it.
Motherfucker.
Millennial Future Earnings Return Fund.
Oh, I thought it was MF or like mother.
It
funny.
is exactly the point. Exactly the point. We just have to think of a more creative name, or I'd love to have Dick personally. I think that'd be hilarious. I would love to troll the exchanges with that name, and I think that it should. Like as we're talking about it, I'm realizing, dude, that like I think a lot of people would get behind something like that. Like companies that are actually building a better future, are more creative, are more innovative, have a business proposal and maybe even a new business side. Because I think that's the thing now is like we're in this position now where it's like we can't even really, I don't think business cycles are nearly as predictable as they once were. I think once AI gets fully leveraged and understood, we'll be able to like take variable data and draw conclusions. But I don't think we're anywhere near that like at this point. I think that like no one knows what the hell this market is and what's happening. No one understands how to, again, we talked about last time, how do you trade war, pandemic, war, more pandemic, conspiracy, political indictment, more war, pandemic's still here. Inflation, economy's destroyed. We're printing some more money. We have a president who's in fucking space. You know what I mean? It's like, what do you do with that? One of them, old president's in jail and getting indicted, whatever. New president's like doesn't even know what fucking day it is. So it's like, what do you do with that? You have insider trading. I mean, Nancy Pelosi again, most successful, praiseth be Nancy, most successful trader of all time, with access to like what the hell is this? This is madness, dude. This is chaos at its finest. All of our great philosophers would have hung themselves having experienced what we're experiencing now. But like, that doesn't mean quit. It's like, all right, how do we build these vehicles to continue venturing forward and make money for all of us that believe in these kind of themes, right? I think it would be very interesting to put together a little bit of a fund. And now in the last couple of weeks, I've met a few people that could potentially, we're gonna have to chat about that. Cause now I'm like into that. Now I'm in.
I mean, dude, there's no ETF that targets small mid cap growth, specifically in AI. That it doesn't exist because they cloud it with a lot of like crappy regional finance banks if it's a small cap ETF, or some plug power would company like the plug power company, which is not a real company. It's all fake noise in these ETFs, but there's nothing that it's like, I don't know, 30 to 40 basket of names that's in small mid cap growth that targets AI, data, e-commerce, cloud. Like it doesn't exist. And I think that's people actually do hit me up a lot. Like, what's the closest ETF that resembles your portfolio? Like they do that a lot, and I haven't found any ETF really. But yeah, we should
Coming
definitely
to
connect on
you
that.
in the future. It sounds like we're gonna have to slap that together. I love it. So yeah, I just found out that Apple 180 call that we were talking about a few weeks ago was up 1,000%, expired today. So another one. Congratulations if you're following that stream. You got 1,000% return there. Congratulations. Again, Apple ripped. We were talking about this back 160, 170. It ripped. Clearly, it was $10, $12 in the money. Oh, the trend line bounce. Good stuff. Yeah. So 180 call. Boom, done. Congratulations. You made 1,000%. Hell yes. I completely forgot about that. I just rattle so much shit off all the time. I always forget. So we're coming up the end here. One quick. So someone's been asking me about Lulu for the last 10 minutes, and I promised we would cover it. Don't love it.
Get out.
To me, it's just like, it's good branding. But it's garbage. Garbage with good branding, and they've built community around the brand, but it's not really community. It's more cult, and the clothes aren't even, they've degraded in quality significantly. I just feel like they could never live down the whole bend over and show me their see-through at the store thing that the guy did. For those of you that don't know, yeah, the CEO said, my pants are not see-through, and then made like an off-the-cuff comment to the press. Stupid idiot. If they're see-through, come in my store, bend over in front of me, and if they're see-through, I'll give you a new pair. Like the most sexist, stupid, like you just, dude, come on. Come on. So that's what you're working with here.
Yeah, I mean, there's better places to put your money. I mean, Lulu has a massive turnaround. Like they have to change their chief product officer. Like they have to change a lot, like their vision of what their what their clothes will be down the line. Like they missed out on the Gen Z market. Gen Zs don't wear Lulu anymore. My fiance is 24 years old. Like she doesn't wear, none of her friends wear Lulu. She doesn't wear Lulu. Like she said, it's just like old. It feels old because they haven't really innovated to like and there's also so many competitors to Lulu. So they missed out on the Gen Z. Millennials, they're becoming more like said, like woke conscious, where they don't want to support a CEO who's obviously an idiot for publicly saying what he just did. And Lulu's retail is not where you want to be in an investment right now. Like I've been very public. XRT, the index, is a very bearish sign. Target suffering, Nike suffering, like Kohl's is suffering, Lulu's suffering. The list goes on. The only one that's succeeding is Walmart, but you can make the argument that's just more of the economy because the American economy shops at Walmart, so it's not a good benchmark on retail.
Dude, none of them have the branding power. It's just too easy to spin up a personal brand and sell it. It's too easy. Yeah. And the quality isn't that far. Like, I mean, at the end of the day, it's like the quality isn't that far off. And you could use something like Teespring and not support slave labor, at least to my knowledge, right? It's like most people will opt for that. And I feel like Lulu definitely, they missed the mark. I mean, the price on that shit, you know that that pair of pants that you paid $129 for cost them $6 door to door. And it shows. I mean, it just shows. They're never going to be, I think they're just stuck in that meaning of like, we want to be Burberry, but like, we're not willing to put in the effort or the pricing power to be it. And we won't. We just won't. But then also it's like, well, we're not the off-brand Target stuff. You know what I mean? Like there's idiots. I just feel like they're in a mid-market dilemma where there's no one. Like there is no mid-tier anymore. And this chart is just, it makes me want to quit investing. I go, I don't touch this.
It's gonna base for years. It's gonna base around $300 for years, in my opinion. Like maybe
whoa. Someone else brought up Novavax, NVAX. What in the hell is going on here? What is happening? This is 300% from end of May. Does anybody
FDA
know
deal.
what happened with NVAX?
Yeah, FDA deal.
Oh, Sanofi acquired. No way.
Oh, is that what happened?
Well, I guess Sanofi Pharmaceutical acquired them. So FYI, on these deals, guys, make sure you're very clear on those filings to understand what the agreed upon acquisition price per share is, because sometimes this will run beyond the price of acquisition per share. So, for example, the deal could have been priced in at like $12 a share, and if you're buying at 15, you're locking yourself into a loss. Do not do that. Do not do that. Unless it's just going to keep trading under that name. But I'd be very careful with that. There's a lot of sell side that came in. I'd be very cautious. But yeah, big shout out to everybody that came on. So this is an all-time high, 5,000 viewers. Let's give a
We had
praise.
5,000. Jeez.
5K, baby. Let's get some. Give me some high five. Come on, give me a
Woo!
double. Boom. 5K, baby. That's because people are starting to recognize this is where they get the juice. Now, just imagine if you guys could get this sauce in person, in a much more educational walkthrough format with a handhold, because that's what you're getting. So I hope you guys join us again. The link's at the bottom for the Discord. Ask about the event, mention Shay, and we'll get you in there. I think we have 2 more spots still that we've kept open. We're going to close them probably at the end of next week. And if you get them, you get them. If you don't, you don't. We're gonna push them back to our audience, let them have them. So I'd love to see you guys there. This has been fun. So Monday we'll be back 5 p.m. Eastern. I hope to see you guys there. Final thoughts?
Final thoughts. If you're a growth investor, this is not the end of the world. This is actually an opportunity that a lot of people have been waiting on for quite some time. Q3 and Q4 of last year, software names ran a ton, and you constantly heard from people like, "Oh, I should have bought back then." Like I saw, it was such clear signs. Like I missed that opportunity. I'm never gonna get it again. Well, we just got an opportunity, and I'm saying like, fine, maybe the software names won't be running for until the next earnings cycle. That's great. There's ways of playing it and raising some capital before that happens. I said that IGV hedge, like buy some puts on the IGV, this broad software sector ETF, breached the 200-day. It didn't recover it, and it actually got rejected even after that bump today. Buy some puts on there and do a pair trade with Confluent, which is bounced right off their VWAP from that October bottom on the gap down. Like that's an interesting pair trade. And also consolidate your portfolio. Like who are your lower conviction names that you like but don't love, and go rebalance towards your higher conviction names. Like for me, I added 25% of Snowflake this week. I added I've been adding the Tesla on the 140, so I'm done with that until the votes. I added some MongoDB today because like I've been pounding a short amount MongoDB for all year. And I was like, it belongs below 250. Guess what? It's at 230. I used all the profit for my puts I bought and bought some MongoDB on that. That's the way you have to play is be agile. Don't be hard-headed. Don't read the headlines of like FUD. QQQ was down 1.6% one time today. Did it finish green today? Let's see. No, close enough. It broke even clearly. So until volume comes back in the market that has a follow-through effect when there's a gap down on the market, like that's when you should be cautious. But until then, like we breached a 21-day EMA on SPY, minimal volume, and I want to see it recover, and it did with volume, with action, pounding the table volume. Like, fuck this. We're continuing this trend. We finished up close to 1% on the SPY. Like, that just shows like the trend will keep continuing. Party's going to continue. There's pockets of opportunity. I wouldn't be adding some of these like Max 7 names right now because they seem a bit overextended, but software names look very like there's a lot of 30%. A lot of software names are elite software names down 30% for the year. That's a great opportunity in my opinion. I'm adding, and I'm not adding just for a short-term 6-month trade. I'm adding for the next 5 years, and that's the kind of mentality you need to have if you want to invest in these high beta software names that will be capitalizing on this AI theme, because this AI theme is just beginning. It's not a race like you're seeing in the major infrastructure players or the chip players. The software application side, it takes some time, and that time, once they get there, the longevity of that move will be way extended, like for years and years, because of the stupid amount of unprecedented pricing power these software names will have on their enterprise clients for using the data. Like they're essentially suffocating them with their pricing power they're going to have. Like there's nothing they can do about it. And it's going to happen. Nobody knows when. A lot of the management on the software companies on this earnings cycle have been calling out like Q2 is going to be a little tough, but we're upping our full year guide. What does that tell you? Second half of this year will be that's where we're going to see that impasse of like AI application. That's where we're going to see that demand happen. We'll see if it becomes true, but that's the risk of buying these stocks right now at such a discount, is believing what the management's saying and also buying when there's blood in the water, because that's when you find the real alpha.
Couldn't agree more. You heard it here. Come back Monday, 5 p.m. Eastern. Love y'all. Bye-bye now.